Hello friends, welcome to CEC Gurukul Live Lectures. Dear friends, today in our series on behavioral finance, we are going to talk on overreaction and optimism. And for the discussion on the topic, we have with us in our studios Dr. Divya Verma-Ghakkar. Dr. Divya Verma-Ghakkar is Assistant Professor in School of Management Studies, Guru Gobind Singh Indraprasth University. Dr. Ghakkar is a prolific professor, and we are delighted to have him every time in the studio because she explains the topic in detail as well as she gives you the relevant examples which helps you out in understanding the different topics. Friends, if you have any question pertaining to today's topic, feel free to talk to us through our toll-free number. Our number is 1800110430. I repeat, our number is 1800110430. Now, I would like to welcome our guest, Dr. Divya Verma-Ghakkar, once again. Hello, ma'am. Welcome to the lecture.
Thank you so much, Geetika ma'am. So, dear friends, our topic for today is going to be overreaction and optimism. In the series of behavioral finance, which is a subject which deals with psychology of investors. So, the idea is that the investors, how do they react to any type of information which comes to them? Stock market basically operates on the information which is coming to them in terms of they will react in terms of buying and selling the shares. So whenever any corporate news comes, the investor is motivated to either buy the share or sell the share. But sometimes there are certain news which comes about any company which leads or which affects an investor in a way that he sometimes overreacts or underreact to that information, and based on that they take their investment decision. So basically this topic is going to talk about that the reaction of investors about stock market, that how do any corporate news which comes, how do people react, if that reaction is unexpectedly over, then what generally people are doing. So that would be considered as overreaction. And if sometimes everyone is buying and as an investor you feel that you don't want to buy or you don't want to invest, so there can be underreaction also. So in any case there can be certain biases or mistakes which as an investor we happen to make. That's what we are going to discuss about in this topic of overreaction as a bias and optimism as a bias. So overreaction becomes a bias when we talk in terms of investment, as sometimes we show unexpected response to a situation which can lead us to the losses. Optimism basically is a positive term, but over optimism about things which happen to us can lead us to wrong decision making, especially in case of investments. Now, talking about overreaction is reacting in an overly emotional and forceful way. It shows that the reaction is much more than what is expected and necessary. Overreaction is very much related to stock market behavior of investors in the market. It is the strongest emotion in the stock market which brings sudden ups and downs in the stock prices of various stocks. Market efficiency theory discusses that any new information which comes, it gets reflected in the stock prices. So as per the efficient market hypothesis, we understand that there is strong market efficiency, semi-strong efficiency and weak form of market efficiency. This basically talks about information dissemination, that whenever a new information comes, how strongly that information gets disseminated or gets penetrated in the market, based on which the reaction of the investor is going to take place in terms of buying or selling the stock. For example, any good news related to a company should lead to rise in prices of the share, and any bad news lead to the fall in the share price accordingly. And if there is no new information, prices should not change, but actually it is not happening in the market. When investors in the market overreact to any news, they create larger than appropriate effect on the stock prices. The theory of overreaction hypothesis states that people overreact to both good and bad news. A sudden rise in the demand of a company's share after the announcement of unexpected high earnings build the buying panic, which leads to rapid increase in the stock prices. Similarly, any unexpected poor earnings of the company drags down the prices of its shares rapidly. So what people would do, sometimes we see that share prices have gone up and people start buying, and unexpectedly the prices rise to a very high level. So this sometimes is because of overreaction of investors towards the market. And secondly, sometimes when a company has incurred losses and people start selling the share, so selling the share and the prices will start falling. But if this continues for a long period of time, we understand that there is a lot of overreaction of investors in the market in terms of selling. So that's why they are selling, and they are not even realizing that the prices should stabilize. So the hypothesis of overreaction can be applied to make profits in the short run. The theory of overreaction hypothesis is inconsistent with the efficient market hypothesis. So efficient market hypothesis says that whatever is happening in the market, it is because of information which gets penetrated in the market, which gets absorbed in the market, based on which the investor is taking the decision. But we have seen behaviorally that the market sometimes overreacts and underreacts to any sort of information which comes. So the investor overreaction hypothesis is given by David Derman, and he explains that in the long run, the worst stocks outperform the market as compared to the best stocks, which generally underperform the market. Impact of positive surprises is more on the worst stock rather than the best stock. On the other hand, negative news in the market knocks down the best stocks much more than they do the worst stocks. Overreaction occurs before the announcement of an earning or other surprise. There are two kinds of news events that result in price movement, namely event triggers and reinforcing events. Event triggers, which are positive in nature, affect the worst stocks first, while negative event triggers affects the best stock first. On the other hand, negative reinforcing events affect worst stocks and positive reinforcing affect the best stocks. Major price changes are caused by event triggers. Now, what is underreaction? Underreaction means when people react with less than expected emotions due to past events that has occurred. They predict the future with less reaction because of some past events. In case of underreaction, security prices underreact to news such as earning announcements or any other market security related news. Underreaction is observed if we release the good news, price keeps trending up after the initial positive reaction. And with the disclosure of bad news, price keep trending down after the initial negative reaction. Conservatism is a behavior to underreact by overweighing base rate information relative to new information. Now, after the affect heuristic refers to making judgment on feelings rather than on underlying fundamentals. The momentum evidence is closely linked to underreaction, since the positive autocorrelation of returns over relatively short horizons may reflect slow incorporation of news into the stock prices. Now, there is a winner and loser theory which says that does the market overreact? A study was published in the Journal of Finance, which posted by the Behavioral Finance Academician Werner D. Bond and Richard Thaler in 1985. The study examined returns of the New York Stock Exchange for a period of 3 years and categorized these stocks in winner and loser portfolio. 35 best performing stock in the winner portfolio and 35 worst performing stock in the loser portfolio. Then performance of each portfolio was tracked with index of the market. The result shows that loser portfolio performed better than the winner portfolio, and in 3 years loser portfolio gave 25% higher returns. The reason they found behind this was the difference was the investor essentially overreacted in both the cases, whether it was a winner portfolio or a loser portfolio. With loser stocks, investor overreacted to bad news, which led to the fall in share price disproportionately. Later on, they realized that negative thoughts were not justified and the share is underpriced, so they start buying again. In winner stocks, investor felt that their positive thoughts were not fully justified about the company. Biasness also lead to people taking their decision towards latest news and information. Our real-life situation and recent observation, news or information have a great bearing on our attitude towards taking decision. For example, coming across a car accident along a long stretch of road that you regularly drive to work, now what will happen is that you will start driving extra cautiously for some day after seeing an accident. Although the road won't get more dangerous as it was earlier, but a mere confrontation of an accident scene causes you to overreact. But soon this state will end and you will resume to drive normally as per your habits. Now, overreaction is the most popular type of human behavior which affects stock prices in the market. As per the theories of finance, the fundamental of company should determine its market price, being all things equal. Now, investors regularly overreact, which leads to pushing prices up too high or too low against their fundamental values. So the markets are not fully rational. The way overreacting of investors across stock market give rise to several strategies. Now, talking about what type of researches have happened in this topic, there is overreaction in the stock market at the expense of long-run trends in information relating to past earnings and security prices. Investors earn abnormal profit by taking long positions in the undervalued stock and going short in the overvalued stock. Investors tend to overreact to unexpected news and do not follow Bayes' rule as per Kahneman and Tversky 1982. Overreaction effect explained by DeBont and Thaler in 1985. They explain it as if once stock price overshoots systematically, then when they reverse, it should be predictable from the past return data only. There won't be use of any accounting data. Specifically, two hypotheses are suggested. When price move in the opposite direction, it leads to extreme movement in the stock price. More extreme the initial price movement is, results in greater subsequent price movements. So there can be three types of effect. Directional effect, that is movement in the opposite direction leads to extreme movement in the equity prices. Magnitude effect, any changes in the prices result in extreme reaction, which offsets the changes in prices. And third is the intensity effect. The response is more extreme when initial price change has shorter duration. Dispute over efficient market hypothesis exists both empirically and theoretically and has been a point of discussion amongst investors as well as researchers. A combination of cognitive biases like overreaction, information bias, representativeness bias, and many other predictable human errors in reasoning and information processing are said to be the reason of imperfections in financial markets, as per the behavioral economist. All such errors in reasoning result in investors avoiding the value stock but buying growth-related stock at high prices. Now, there has been a mixed empirical evidence, but in reality, strong form of efficient market hypothesis is not at all supported. Derman and Berry states that stock have low PE usually have greater returns. Dremen found that assertion given by Ray Ball regarding the high returns can be result of higher betas. Efficient market theorists accepted Bali's research and reported that it is useful in providing solutions to anomaly as per the modern portfolio theory. The efficient market hypothesis is an interesting, well-studied and most controversial topic in the social sciences. Pharma summarizes EMH as price fully reflect all available information. Now, markets can be categorized into three stages as per the available information, that is weak form of efficiency, semi-strong form of efficiency and strong form of efficiency. Now, the theory of EMH states that in any perfectly efficient market, stocks will always trade at their original value and will give normal returns. Thus, it is impossible to earn abnormal returns based on information available about the past. The salient and prominent information captures people's attention and become more important in the process of decision making. Such information are weighted more and valued more while forming new beliefs which result in overreaction. This leads to deviation in the prices from their fair or rational market value. Overreaction can be seen as a form of panic selling due to slightly wrong or worse news. Now, if a company were to release a poor performance financial report, then panic selling would occur and the share price would fall. The basic idea to avoid overreaction is to understand that an investor as individual is affected by it, and there can be strategies to overcome overreaction in any circumstance. One should not neglect the basics. One must look at the basic fundamentals of a company so that one does not overreact in any positive or negative news about a company. Understand your body reflexes. Whenever one has intense emotions, there are some body responses and one needs to identify them, like fast heartbeat, tense muscles, excess sweating, stiff neck, and one can name these feelings. When you name these feelings, it activates your brain and allows you to reflect on your situation rather than reacting to it. Identify the clues. By identifying the names and sensation of your body, you can intervene your thoughts. An intense emotion leads to worst case scenario. Keep a look for all or nothing words like always and never. These words can be clues where you can tell that you are heading towards worst case scenario. Deep breathing. It is always advisable to take a deep breath before responding to a haphazard situation, as it helps in slowing down your fight and allows you to calm down your nervous system, as well as in turn results to choose a more thoughtful and productive response. If next time someone tries to cut you off in the traffic, calm down and take a deep breath and then react. Now, past emotions also play a role, so they need to be resolved. Take a note of your overreaction pattern. If it is observed that there is a repeated revisiting of an intense emotion or behavioral response, there is likely a historical component that needs to be addressed. Knowing the difference between reacting and overreacting. It gets particularly important that one is able to differentiate between what is reacting and what is overreacting, because generally every intense response may not be an overreaction. There is absolutely no problem in the feeling your emotions and expressing yourself according to them. Physics also says that every action has an equal and opposite reaction. Learn to be aware of cognitive distortions. Automatic thinking patterns that convince people about things that aren't true are termed as cognitive distortions. They are often negative and highly self-critical judgments that make a person feel bad about themselves. So looking at all these things, now we can understand that how overreaction can be avoided. Now, whenever there is a situation where you are trying to understand that how should you react, now look at that if that reaction is a balanced reaction or it is going towards overreaction. So whenever there is a panic situation or there is a situation where there are some emotions where you want to react in a very different manner, one should look at that your reaction should be balanced. You should try to normalize and try to think about your thoughts, what are coming to your mind, and then try to take a decision. So it's not always advisable to react immediately to any situation which comes to you. So similarly, this strategy can be applied while investing in the stock market. Although while investing in the stock market as an intraday trader, you may face certain problems, like there can be, because the decision has to be taken in a few microseconds. So at that time, you are seeing that market is falling and then you are incurring a loss. So that can create a situation of panic within an investor. But then also one has to remain composed and one has to look at that how you are reacting towards it. So that you are not overreacting to any particular news which is coming or any trend of the market which is going on, and then take a balanced opinion. Now this completes the overreaction topic. Now we move on to another bias called optimism bias. Now optimism can be viewed as intrinsic thinking, hopefulness and confidence that give us power to think positive about the future or the success of something. So optimism or positive thinking is always considered to be a very good attribute of any person. So if you are a positive thinker, if you are optimistic, so it is considered that you will be able to handle things in life in a balanced way, in a better way as compared to somebody who's negative thinker or who's a pessimist. But then being over optimistic also can create problems. So Nobel Prize winner Daniel Kahneman and Daniel Lovallo has described optimism bias in financial decision making as a tendency of investors to adopt an inside view in lieu of an outside view. It should be noted that inside view of significance is of significance as it focuses on current situation and reflects personal involvement, whereas an outside view only assesses a current situation based on the results obtained in the past related situations. The inside versus outside thought processes distinguishes investors exhibiting optimism bias from investors exhibiting rational economic decision making. Usually, unreasonable forecasts tend to derive from biased feelings about current situations and ignore the outcomes of related situations. Now, investors can make more realistic judgments if they take into consideration such outcomes. Optimism as a term was originated from a Latin word called optimum, which means best. Optimism is a positive mental attitude. An optimistic person is the one who expects best possible outcome in all situations. In psychology, it is referred to as dispositional optimism, wherein it is believed that future conditions will work for the best. There will be a very slight difference between optimism and pessimism. This can be well explained by taking a simple example of a glass of water which is half full. So an optimistic person will say that glass is half full, and a pessimistic person will say that the glass is half empty. The following are the determinants that leads a person to be optimistically biased. 1. It can be because of their desired end state, their cognitive mechanisms, the information they have about themselves versus others, and the overall mood of the person will also determine that whether he'll react optimistically or pessimistically to a situation. There are few concepts related to optimism. One is known as psychological optimism. So Tel Ben defined psychological optimism as the willingness of a person to accept failure while remaining confident and believing that success will follow. A positive attitude he/she contrasts with a negative perfectionism. Second is dispositional optimism. It is assessed by using the tools like life orientation test. Dispositional optimism and pessimism is taken into account by asking a person what is expected by them out of future outcomes. It is also becoming necessary to identify whether future outcomes will be beneficial for them or negative for them. The optimism test keeps the two scores, namely optimistic score and pessimistic score, apart from each person. Generally, the two scores tend to correlate around 0.5% value of correlation. Optimistic scores on the scale predict better results in relationships, also higher social status and reduced loss of well-being following adversity. So it can be said that health preserving behaviors are associated with optimism, whereas health damaging behaviors are associated with pessimism. Obviously, people who are having positive attitude have better health as compared to those who have negative attitude towards life. There is an explanatory style of individuals. Explanatory style is a psychological attribute that indicates how people explain to themselves why they experience a particular event, whether it is positive or negative. People who usually blame others for negative outcome or event believe that such events will continue to happen indefinitely. These people allow this negativity to impact a lot of aspects of their own lives, and this term is known as pessimistic explanatory style. As against it, people who generally blame outside forces for all the negative things happening around them believe that all such events will ultimately vanish and they will never let such events have any impact on their lives. And that's why they are called optimistic explanatory style. Environment also affects the optimism. The surrounding environment plays an important role in making a person optimistic or pessimistic. Environmental factors such as family environment influences optimism and pessimism strongly. Observations reveal that optimism can be a reflection of underlying inherited traits such as alcoholism and intelligence. Research supports that optimism can be learned, and family environment can increase or decrease the level of optimism and pessimism in a person. Health is also associated with optimism. Health of a person is reflected in the attitude of the person, and there is a strong association between health and optimism. Researchers have shown this relationship has been studied with respect to physical symptoms, coping strategies, and negative effect. It has been reported that people suffering from asthma are more pessimistic in nature. Optimism also leads to well-being. In 1990, Taylor conducted a study which assessed incoming fresher students on a range of personality factors such as optimism, self-esteem, locus of control. It was found that there existed lower level of psychological distress among freshers who have scored high on optimism before they entered college, whereas their peers were pessimistic. After some time, it was concluded that students that were optimistic suffered from less stress and were less lonely too. They did not feel much depressed as compared to their pessimistic peers. So, as per this discussion, there exists a link between optimism and psychological well-being. Now, the practical applications of optimistic behavior, let's talk about it. Related to superior health, there were studies conducted. So, a study conducted by the Harvard University on 99 students revealed that students who were optimistic at the age of 25 are found to be significantly healthier at the age of 45 and 60, while those who were pessimistic at the age of 25 years are not found to be healthy at the later stage of their life. Many research studies have also linked pessimistic explanatory style with higher rate of infectious diseases, poor health, and earlier mortality. Optimism leads to higher achievements. Another study done by Seligman studied that explanatory style of different sports teams and found that optimistic teams perform better than pessimistic teams. In addition, a study on pessimistic swimmers who accepted that they have performed worst in the past are more prone to poor performance in the future as well. Persistent. Optimistic people have persistence and patience in their efforts and ultimately achieve success even after multiple failures. For example, Donald Trump, the present president of United States of America, became bankrupt many times but kept on working and was able to turn failure into fortune. Emotional health gets affected by optimism. A study on clinically depressed people found that cognitive therapy of 10 weeks is better treatment than consuming drugs. Clinically depressed patients who were given cognitive therapy had long-lasting effect than a temporary fix and were found to be more effective in handling setbacks in the future. Increased longevity. A survey was conducted for 34 healthy Hall of Fame basketball players who played between 1900 and 1950, and it was reported that optimistic players lived significantly longer than other players. Many distinct studies have reported that patients suffering from blood cancer were really optimistic during the time had much better health outcomes when compared with those people who were pessimistic about their health and were hopeless. It leads to low stress levels also. Optimistic people are less susceptible to stress as they strongly believe in their own abilities. Belief in oneself allows them to overcome negative events and setbacks easily. They expect that good things will happen to them and consider that setbacks and failures as minor. They take positive incident as a proof for future growth, good things to come. In short, optimists overweigh the positive events than the negative events in their life, and they perceive that good things will happen to them. Optimists tend to take more risk and craft positive events into their lives. The optimism bias. Now, what is the impact of optimism bias? When does this positivity leads to problems or mistakes while taking any type of decision in our lives? So, what is the impact of optimism bias? We are going to discuss about it. The optimism bias can lead to poor decision making. So, if you are too much positively influenced by whatever things are happening around you, and you feel that everything is going to be positive in your life and only look at the bright side of the things and ignore all the dark side of the things. So there can be problems while taking decisions. So Tali Sherratt, author of Optimism Bias, a tour of irrationally positive brain, who is a cognitive neuroscientist, claim that many people suffer from this bias across cultures. According to Sherratt, although optimism bias can lead to poor decision making and thus result in negative outcomes, it increases the chances of well-being as there is a sense of positive anticipation of future outcomes. So it works as a law of attraction. That is, if expect good things to happen, we are more likely to be close to them and stay happy. Optimism helps people to follow their goals no matter what. Now, what are the factors that promote optimism bias? Rare events allow individuals to make optimistic opinion about them, as people assume they will not be affected by it, like hurricanes, floods, earthquakes. So if people feel that nothing is going to happen like this to me, so they are maybe over optimistic about things. Optimistic bias becomes strong when people believe that the events are under their direct control and they can influence it. When an individual thinks that negative event is unlikely to happen, then optimism bias occurs more. For example, people may believe that cancer is spreading, but they will be unaffected by it. The factors which reduce optimism bias include when comparison group is kept closer to individual, it is seen that likelihood of event occurring to the person and his friend has no difference, so it reduces optimism bias in the individuals. Studies prove that depressed and anxious people are less likely to suffer from optimism bias. Some examples of optimism are stated under in idioms and popular phrases in life. When life gives you lemons, make lemonade. So we have all heard about these things. That means one should try to make the best out of every bad situation. Every cloud has a silver lining. That's again a positive, optimistic statement. It means that in any bad situation, there is something good going to happen. Hope against hope. We all have heard about it, to hope very strongly when the situation is hopeless. There's another idiom called there's a light at the end of the tunnel, meaning something that gives you hope for the future after a long, difficult time. Keep your chin up means remaining cheerful in difficult situation. Hang in there, be patient in a difficult situation. There are plenty of fish in the sea. That means there are other choices available and one should feel optimistic about things. Another idiom is very popular: when one door closes, another one will open. When you're lost in one opportunity, you will find another one, and that's how you can keep going. Count your blessings. One should be grateful for good things that has happened to us and whatever we possess. Everything is coming up roses means everything is really excellent. So in our daily life, we have seen a lot of situations when they come. So there are many good examples of optimism. When your phone rings and you assume that you're going to get a good news, so it is optimism. One gets less mark in a test but promises oneself to perform better in the next one. So this is also one way how you can judge that whether you're optimistic or not. When your meeting gets cancelled, an optimistic person enjoys that time. So an optimistic person, even after getting paralysis, waist down, identifies that he can use his hands for many different things to do. It is different from optimism bias, which needs to be taken care of by every individual. Now, some examples of optimism bias. Students expect to receive higher marks in exam before starting the exam and later on receive less than expected marks. So there were studies which were conducted by researchers on this. There was another study in which it was found that second year MBA students overestimated number of job offers they will receive and salary they will get. Vacationers expect more enjoyment in upcoming trip than previous one. So this is another example of optimism bias. Some newlyweds always expect that their marriage will continue a lifetime and they will never have fights between themselves, despite they understand and they see people around them that there's a lot of divorces and a lot of fights happening in all couples. Now, some investment strategies to manage optimism bias. So that means there's a very fine line between if you are optimistic about life and you become over optimistic about life, and that leads you to making a lot of decision making mistakes in life. So your optimism level should be taken care of by you, so that you do not end up making it into a thing which is which leads to problems in decision making, or which leads you into losses, or which leads you to some problematic scenario which you never expected. So let's talk about some investment strategies to manage optimism bias. So that means while taking any investment decision, what you should be careful about, so that you are not affected by optimism bias while managing those things. So live below your means and save regularly. As an investor, one should always, even if you are optimistic about things, so one should look at the long-term financial goals that can be attained by savings and investment. So you should have enough saving so that you are able to and keep investing money, so that you are able to match the market returns which you are expecting. Optimism bias motivates a person to take more risk and thus can affect his saving badly. So if you are over optimistic, or if you are suffering from optimism bias, it can happen that you only see the positive side of things, and you take higher risk in your investments, which can lead you to losses more. So thus, investors who want to stop this bias should try their best to save responsibly and should also invest wisely whenever there is an opportunity. Asset allocation is the key to successful portfolio. Optimism bias result in favoring a certain asset class and ignoring the other. So as an investor, if you are having optimism bias, then it may be possible that you are investing all your money in some particular asset class, which should be avoided, because if you put all your eggs in one basket, it can lead you to not earning higher level of profit, or can you end up, you can even end up into losses also. So advisors should encourage clients to build balanced asset allocation portfolios and to stick with them. Compounding contributes significantly to long-term financial success. Now, optimism bias can hamper the profit of investors by not allowing them to adopt disciplined investing. Investors should be able to accumulate money and be able to compound it year after year. One should encourage the use of a financial advisor. You can take your own decisions, but if you do some discussion with somebody else who's a financial advisor or who's an expert, then he can help you avoid any such optimism bias mistakes. So overall, we can talk about that overreaction and optimism bias is a very common thing to be seen in investor behavior. While making any investment decision, one looks at information and latest news and takes short-term approach. And taking a short-term approach may not yield you the best results. So investors should be careful while taking decisions, as they may be overreacting or underreacting to any news. Also, if an investor can identify that he is affected by optimism bias, actions should be taken by him to manage the situation. So that's all for this topic. So over to you.
This note, thank you so much for explaining us in detail about overreaction and optimism. Dear friends, we believe that you might have questions in mind, and if you feel so that your question to be answered, talk to us through our toll-free number. Our number is 1800110430. I repeat, our number is 1800110430. Dear friends, till you call us, we have a lot of questions in mind, and we would like to ask those questions from Dr. Divya Verma Ghakkar. Hello ma'am, welcome back, and today we are talking about overreaction and optimism, how it plays important part in fact in everybody's life, because we are talking in some other context. So my question is, do you have any example, or could you please quote some examples where people have overreacted when they got news about the stock market?
So basically, when we are talking about behavioral finance, so this is a very relevant question you have asked today, because when we behavioral finance as an investor behavior theme is similar to what we are doing in our day-to-day lives. So as an individual, we are taking decisions which are taken by us, which can be related to purchase decisions, our relationship related decisions, our career decision, and so many other decisions. So we happen to overreact in those scenarios, and we have that optimistic attitude of life or pessimistic attitude of life. So these things exist. Similarly, these things exist while taking financial decisions as well. So while taking financial decision, we can overreact and we can show some instances of optimism or pessimism. That is what we try to elaborate. So that's why your question is very relevant. Now, if you look at the stock market, in the stock market, so all the shares which are listed in the stock market of companies, so the companies, they annually report their profits. Apart from that, on daily basis, you will find in the newspaper, there are so many news coming about companies. Some companies go for merger. In some companies, there is a conflict between employer and employees. And there are certain issues related to customers. And so these type of news, when they come into the stock market, these news, they can affect the investor's perception about the shares. So as soon as an investor who's sitting on one side and thinking of investing his money, he receives any information, he's bound to react to it. In what way he's going to react, that is important. And we have many times seen that in the stock market, related to specific companies, there were instances. So one very relevant example which all of us have seen in our life was 2008 crisis, the global economic the financial crisis that happened in 2008, which affected the whole world. So suddenly we saw that stock market is going down, and there's a bad news coming from US, and there's a subprime crisis that has happened, because of which suddenly the confidence of everyone in the market was going low, and people started selling the shares. And we could see that all the prices of all shares across all stock markets, they were crashing and the prices were going down. But if there is a person who is rational at that time, even if you have your portfolio being invested at that time, it is possible that you do not sell your portfolio. You stay invested and wait for the right time to sell your portfolio. So some people at that point of 2008 crisis, everybody started selling because they were thinking that their money is lost in the market and the market is never going to come back. So let's disinvest and let's whatever we get back our returns. So let's take that money and go back home. So that is one way how overreaction happens in the market. And when overreaction happens, you will see that the stock market, if it is falling, it will not stop. It will keep on falling and falling due to some reasons which are known, and many times there are reasons which are unknown. So that unknown reason is the overreaction of investors. Even if you know that there's a bad news that has come, the prices should fall, but it should not fall that it is falling and nowhere it is stopping. Similarly, another example which I can quote here is, if you have heard about PNB, Punjab National Bank, and there was a news that there was a fraud that was done by Nirav Modi, and because of it, the PNB stock, it suddenly there was news in the newspaper, and the perception of everybody about a public sector bank like PNB was disturbed, and people were their faith was shattered again, that if a bank like this, there can be a fraud which was undetected, which was not seen by people. So we could see that reaction. If at that time, if you see the stock prices of PNB, they started falling because everybody who was an investor in PNB, they wanted to sell because there was lack of trust, and people thought that this bank will lead to a crisis, or they'll never be able to make up back with the kind of profits they are having. So investor is interested in the profit, so they want to disinvest, and then the fall in the prices was continued for a longer period of time. So sometimes, so that is also an example of overreaction. So this overreaction can be positive as well. That when you see that there's a good news about a company has declared their profits, and next day you see that stock prices start increasing. and it doesn't stop even if the prediction is that it will increase by 10%, but you see that it is increasing every day because of that positive news. So Reliance also got this kind of a overreaction thing when they announced with the Jio platform that they are launching a Jio Mobile and all those services, which were liked by everyone. So again, we could see that there is positive trend of prices in the market. So these are few examples how we can see that market is overreacting.
So what could be done by the investor when he or she hears such kind of news? Instead of overreacting, what could be done?
So whenever you end up in a situation that there are stock prices which are, there's a news which has come. Let's say if the news is related to PNB, as we have just quoted this example. So if you have heard a bad news about a company, it's not necessary that now it depends that at what stage, what type of investor you are. So there are few things which one should keep in mind as an investor. You should not put all your money in, let's say, one particular stock. So you should not invest all your money in PNB, but there should be a portfolio, like you should have some banking sector stocks, you should have some IT related stocks. So like this, and then you should have some fixed deposit investment, you should have some other investment in mutual funds. So like this, one should divide their portfolio. And if you are a balanced investor who's dividing his portfolio like this, then what can be done is, then second important thing is to consider that whether that investor is in need of money at that point of time, or that fund which he has invested in the stock market is a surplus fund. If it is a surplus fund, then even if there is a bad news or a good news coming, there is no need of overreacting to it. So one can always wait for the right time to buy or sell. But if it is there some urgent need of withdrawing money from the stock market because you want to use it for something else, then you may have to disinvest at that point of time. But whenever any news comes, one should try to evaluate that news. One should always try to look at the fundamentals of any company. So all the companies, they have their balance sheet, they have their assets, and on the kind of performance they are making. So one should always look at the annual reports of companies and try to calculate various ratios, or try to judge that how good this particular company is. So if the fundamental worth of the company is very strong, so it is not possible that a very strong company with a very strong base would suddenly be eroded by some sentiments in the stock market. So even if some bad news has come, let's say we know that PNB is such a big bank in India, and it's a public sector bank. So if one fraud has happened or one bad news has come about it, the bank is not going to die. The bank will continue its operation. It will always come back. They have their own mechanism to come back and cover up such losses or frauds, that crisis situations that happen. So no need of getting into a panic. So if you are not getting into a situation of panic, so one should always remain cool and calm while once you have read a news, even if it's your huge amount of money which is invested in the stock market, one should look at that, okay, even if this news has come, if I'm not in need of money and I'm not in need of disinvesting my portfolio right now, I should wait for some time and wait for the right time, so that the market, once it comes back, I can again start investing in and wait for the right time to come the price to again back to a level so that you can invest. Third important thing is that if you are not a long-term investor, because there are people who are intraday investors. Intraday investor means someone who's buying the share. So the stock market operates from 9:30 to 3:30. So within that time, you are trying to buy and sell, and you're watching the market every minute and every second, and you're watching certain stocks and you want to buy. Let's say you have bought some shares in the morning, and by 3:30 you want to close your transaction, and then there is a need to sell and the market is falling. So you are looking at that, the market is falling and your price, you are going to incur a loss. So in that case, there are strategies available like stop loss. So one can opt for a stop loss strategy that you can fix up that, okay, today I can take 10% of losses. So if I have invested 10,000 rupees in the market, so if my portfolio goes below 9,000, I mean below with 1,000 rupees of loss, then my portfolio should automatically be sold. So such a strategy will, because there is always a scenario that you don't have all the days are good for you, so some days are bad for you as well. So if you are an intraday trader, in that case your idea should be that you should try to avoid such situations by having a balanced approach and maybe adopt stop loss or any other such strategy and exit at the right time.
Overreaction in itself, it's a negative term, I would say.
Yes.
So if we talk about drawbacks, what drawbacks it will put forward if somebody has overreacted to a particular news?
So if somebody has overreacted, so there can be bad decisions. So first important thing, so your decision can turn bad. That means you overreacted, and so we have seen nowadays the aggression and overreaction in people's attitude has increased so much that we see this overreaction and aggression every time on the roads. So there are scenarios and situations, if we delay any particular decision for some time, or if we try to give ourselves some peaceful thought for even 2 seconds, so maybe we will not end up into anger, we will not overreact, and we will be able to control our aggression and take a balanced opinion. So when somebody is angry or somebody is anxious or is in a panic state or is very stressed and has a lot of anxiety, at that time whatever decision you will take, later on you may repent that decision and you may feel that you should not have taken it. So this is how we deal with our life on daily basis. So similarly, while taking financial decisions as well, we can see that if you will take any decision in overreaction, you just are panicked with, you expected the market will go up, but the market is going down. You expected that market will go down and market is going up, and you are in a panic. So at that time, if you are peaceful, if you know how to manage your stress levels, wait for 2 seconds or 2 minutes before taking a panic decision, and then maybe your decision will be well balanced. Otherwise you will end up into losses, and you should be able to handle that loss scenario in case it happens, because not all days are good. Some days you can have a bad outcome and some days can be good. But if you know how to handle situations well, maybe overreaction will never cause a problem at any decision you are taking in life.
So what importance or what role does optimism plays when news broke out? So does it plays an important role?
Yes. See, optimism, we always see that it is a positive word, it's a good word, and we always feel that one should be optimistic. And in this topic also we have discussed that how good it is to be optimistic. It has benefits on your well-being, on your health, and all of good things that can happen to you. If you think positive, maybe things will turn out to be positive. But over-optimism or optimism as a bias, when we are talking about, it means that you are ignoring the negative aspects completely, and you're just blind in terms of looking at only the positive side. So if you only look at the positive side of things, now if you have heard about this PNB news, but you are optimistic, you are a loyal customer of PNB and you understand that PNB nothing can happen, so my portfolio will be safe. And so an over optimistic person or a person with an optimism bias will ignore all negative news that is coming. And if you are ignoring all negative news which is coming and you start buying PNB shares at a time when you know that the scenario can turn out to be bad, so market can go anyway, it can go up, it can go down. So if then you are ignoring the negative aspect of things completely. So one should take a balanced view, or one should take consider both the factors, positive factors as well as negative factors, and then make up his mind while taking any decision. For example, another example of optimism in our daily life would be that if a student is very optimistic and he feels that I know this subject, I am very good at this subject, I need not study and prepare for exam, and I will just go like that and sit in the exam. So in that case, he is over optimistic and overconfident about his abilities. It may happen that he may fare well in exam, but he may not be the one who is the topper, because he has not prepared well for the exam. He has not studied few days before the exam because of his over optimistic attitude or his overconfidence level. So in that way, little bit of, you have to look at all aspects of things, whether positive or negative, and then take a decision.
Now, last but not least, what are the advantages of being optimistic? Though we have discussed it in detail, but still, like you to answer.
Yeah. So, if one wants to be optimistic, so it's always a good thing to be optimistic. Like optimism has a lot of benefits in terms of health. Nowadays, as individual, we see the kind of scenarios we are living in. We are living in high level of stress and anxiety levels. A lot of competition is there. So optimism, first thing first, is being confident about your own abilities. So one should be always looking at that, I have certain good things in myself. Everyone has some strengths. Everyone has some good things. So optimism will always bring you that level of confidence. So we always suggest students that they should be optimistic about life. So and there are problems like depression, and stress, anxiety levels, which we see at all age group levels, which can be hazardous to us or which can lead to a lot of wrong decisions. So it is always better to be optimistic. So one should be optimistic about your own abilities, your strengths, and when God has created us, He has thought that everybody has something good. So if you understand what is good in you, then maybe nobody can stop you, and you can excel in any aspect of your life. So one best thing about optimism is that if you are optimistic, so you can take decisions well in life. Second, that it will help you in health and well-being, and your health will improve. You will have no negative thoughts. Third, there is another very beautiful saying that if you conspire for something positive, so the whole world conspires it for you and you get it. So being positive and optimistic about future is always a good thing. So it may lead you to best results or best outcomes in your life. So I think these are the things which you should be taking.
With this note, thank you. Thank you so much for giving us this productive session. And friends, we believe that you too are positive, you too are optimistic, because we, through the live platform of CC Gurukul, always try to give you the useful content, and we believe that this content is useful for you. You are optimistic with the content we deliver to you. If you have any question or if you wish to give your feedback for this particular lecture, then do write to us at info.cec@nic.in. The lecture is going to be uploaded on YouTube soon. Keep watching us, keep writing us. We are taking your leave with the promise that we are going to meet again. Thank you for watching CC Gurukul. Thank you, ma'am. Thank you so much.